Good afternoon, folks. Welcome back. We are live. All right, so it is Sunday, May 5th, special occasion today. So we're shifting the time back an hour so we can wrap this up. I was thinking of just doing a pre-recorded this morning. Usually my analysis for the pre-market ahead of the week is usually done Sunday morning. But, I come on here with you guys in the afternoon to share what it is that myself and my team of analysts are looking for. So with that, we're going to have probably an abbreviated session here today, but we'll cover all the most important points. I know how influential and helpful this is to a lot of you guys, to a lot of your guys' pre-market routine from all the feedback I've been getting. So really appreciate that. So with that, guys, we'll go and get right into this one. Denisha, happy Sunday, team. Happy to have you, Denisha. Daniel, hello. Electron, welcome back, brother. Great to have you. Daniel, hello. Abisera, howdy and good luck this week. Thank you. You as well. Ahmed, great to be back. Glad to have you, brother. Olawale, happy Sunday. Awesome, guys. We'll get right into this one. Get into what we're looking for, and let's get to the bag this week. All right, starting from the monthly chart. Very important because we just opened a new monthly candlestick, right? So I was bringing your attention to that last week because that is influential in my analysis, right? Again, just because I'm bullish doesn't mean markets go straight up and straight down, or straight up, or if bearish, straight down, right? We have to account for measures of retracements against the underlying direction that we're expecting. Luckily, the markets are rigged, so we know when they're going to retrace, when those retracements are permissible. I do this a lot intraday whenever I'm, well, obviously because we get a lot more examples intraday, but the same thing applies to all different candlesticks. So for those that are, in mentorship with me and we work over live price action and we call these things before they happen, you guys will recall many times, like whenever I'm bullish and we're like looking for this high, for example, right? And then the 15-minute candle will open and I'll tell you, okay, the 15-minute candle is likely to expand here, but before it's going to do so, it's likely going to create what? Its wick. So that's how we know when these retracements are likely to happen and how far they can retrace. So the same way or context I would look at that in the lower time frame, you can apply it to the higher time frame as well. So what am I saying there? Power of 3 is something that applies to all time frames. So if I'm bullish on the monthly and I want to see it trade higher, which is what my expectation is, we expect it to open and create the wick or the bottom end of parameter of a candlestick. So what I'm expecting after trading lower, if it's going to be bullish, would be a displacement to the upside. I liked how April, which again, we were bullish the entire month, looking for higher prices, and then a beautiful open low, strong close on the month, which is exactly in line with our expectations. A new month opens up. We have to, again, think power of 3. So we have to allow for it to drop. So that's what I attributed to dollar trading to its short-term discount to, is the monthly power of 3. So this balanced price range here, now that we closed the month of April officially, I like to see how we closed above that. That's indicating it's strong. A balanced price range is a strong PD array in and of itself. So it's something that in my analysis, if we're able to get through it, that's something that gives me additional confirmation that we're in a bullish market. So I'll be interested to see how we trade in this monthly candle here. Again, if it's going to be bullish, I'll want to see it turn into a bold blue candle and expand into the buy side here. We've already been consolidating for a long time. The discount's been offered. Market structure's been priced in bullish, again, as we've been looking at this entire year, and going to continue looking for higher prices. But again, we'll refine this throughout the time frames. All right, moving right along. Weekly chart, bullish institutional order flow and bullish market structure, right? Again, that doesn't always mean markets go straight up. So we had this weekly fair value gap here. The month of April, we nailed it, right? Open, which is the first week of the month here on April. It trades lower first into a discount. Why? That's smart money accumulation. And then they do what? Distribute to the upside. And it happens based off a scheduled delivery. So it's going to drop lower when? In the first week of the month, when the accumulation phase is taking place for the monthly range. And then they do what? They distribute it on the expansion. So we got called expansion this week here, and then this week higher, where the long positions that were accumulated in the weekly fair value gap in the bullish order block we've been watching were distributed in a premium, right? So you see how this is very systematic in its delivery once you know what you're looking for and how to read the candlesticks. So we see this week we traded lower first. I'm still bullish on the weekly chart. Nothing's changed. All we've done is trade down deeper into this weekly inefficiency and deeper into this bullish order block. So as long as we remain supported in this bullish order block on the weekly chart, I'll expect higher prices into these equal highs on the weekly here, and then these highs here. What I'll also want to see an additional confirmation will be, I want to see responsiveness off this bullish order block. So I don't want to see it just hit it, consolidate, and hang out. I want to see it hit that level, which we already did. Monday going into Tuesday, I want to see bullish market structure priced in, right? Like a change in state of delivery, market structure shift, and then see that bullish order flow priced in on my lower time frame charts. But again, order flow remains bullish. All we've done was trade into a down close bullish order block. If we get down through that, then I'll have to again reassess and then look at where we're likely to go from there. All right, moving right along. Daily chart. So again, we've been watching this price run here within the context of a market maker buy model to get up into a premium, right? We look for this buy side here, traded into that. We looked into this inefficiency, hit that, buy side, and then this inefficiency here, right? So we reprice into all those premium targets. So it's reasonable for the market to retrace. What time would it do so? At the new month. So with what we were looking at last week, I was looking at this down close candle here, and I wanted to study the willingness of the market to find support there and just keep expanding higher. On Monday's trading, it traded down through it and closed below the 50% of that candle. So that negated that as a bullish order block in my analysis. So as soon as we got through, let me mark this out. As soon as we got through this daily inefficiency here, my attention immediately turns to the discount end of this range. So that's the bullish breaker. So once we dropped, I wanted to see the market trade into a discount from this range low to this range high. That's the dealing range that we're in on this time frame. We traded into a discount, into this inefficiency and this bullish breaker. So this is the last line in the sand for me to be bullish. I like to see how we traded down into it with the wick, but then look at where the body closes. That's telling you something algorithmically. And what the algorithm's referring to is this price range right here, which is this last up close candle before the rotation lower and then higher. So extending that range through, that's what the algorithm's respecting. So as long as we continue to see that, I want to see the algorithm again show me its hand or reveal its hand as to where it's going to go. And what do I mean by that? Well, we've traded into a discount. So if it's going to be bullish, I would want to see bullish market structure shifts, change in state of delivery, and bullish PD arrays start supporting price. Bullish discount PD arrays supporting price. I also particularly liked how they left these equal highs here, because now that's really selling the idea of what? A top. Where I'm looking at this as a bull flag, stop out the bull flag traders, take it to a discount early in the month, and then they take it higher. So again, that's another reason why on non-farm payroll weeks, I'm more reserved in my analysis. I'm not dogmatic, like, okay, this has to happen, or, you know, it's no good. Because these weeks, their characteristic is to run against the underlying order flow. It's almost like a disruptor event. I really like the way ICT explained that. So the way I look at these weeks, like non-farm payroll, FOMC, is they're going to run against the grain of the underlying order flow. Well, who's been making money? People going long. People that have been expecting this market to trade higher, like you and I have. Well, what would upset their position? Dropping it. When's it going to do that around these types of events? So again, I want to see how we trade there moving forward, and that's going to be influential looking at these specific discount price ranges. Again, also like the equal highs that they left here, and that'll likely be a draw if it shows the signatures that we'd want to see in a discount. Moving right along. Hourly chart, not much here on the hourly. Last week, they took it higher. They stopped it just short of this high here. And then they dropped it off into a discount. They left those equal lows. So again, we were in a sloppy range, took it to the high end of the range, and they broke it down. So again, I want to see in the lower time frame how we trade inside this range that I have highlighted here, denoting the bullish breaker. ICT had a interesting workshop this week. Notice he was talking about dollar, some higher time frame analysis and whatnot. It was interesting to see him referring to a lot of the same levels. And not that I'm at a point in my development where, you know, I'm using my confirmation or confirming my analysis with ICT, but it is interesting to see nonetheless. All right, weekly chart. We've been seeing bearish institutional order flow on the monthly chart, excuse me. So we traded higher into a premium from this range high to low. Again, we've been watching this throughout this year. So from this range high, this range low, it traded into a premium and hit the last up close candle, or last two consecutive up close candles. We hit that. We anticipated what? The rotation lower, and it did so into the discount bullish order block. So bonds trading lower. Why are you looking at bonds, Dylan? I don't trade bonds. You don't trade bonds. But what that helps me understand is why we're going to be seeing a buy model on dollar. So I trust bullishness on dollar because, again, of the intermarket analysis. So dollar trading up to its respective premium, and then we had bonds doing what? Trading into their respective discount, right? So that's the ebb and flow of the marketplace. Monthly chart, last thing I want to mention there. So we got a nice bearish month as we were expecting, and that bullish order block was our downside target. We just opened this new monthly candle here. Nothing's changed in my analysis. I'm still bearish on the monthly time frame. So again, if it's going to be a bearish month, most candles are going to have a wick on the high end of it. So I anticipate that wick, understanding the concept of power of three, where above that opening price is where smart money accumulation is taking place. So I want to see this wick or this candle trade higher, create the wick, break down, and then create a bold black down close candle. So that's my expectation for bonds. I use the bullish order block as a target on the downside, not necessarily the ultimate low, and then we're going to reverse and trade higher. If we do that, then we'll see what the market shows us, and then we'll get in line with that. But for right now, lower prices on bonds, which means higher interest rates moving forward. All right, weekly chart, refining this a bit further. We have 1, 2, 3, 4 consecutive weeks of down close candles in line with our expectation. So it's reasonable to see the market retrace, right? Again, markets don't go straight down or straight up. They drop and then they retrace. Luckily, what I'm sharing here, we know exactly when it's going to retrace and how far it can retrace by understanding institutional order flow. So we open this monthly candle here. They stop it just short of this weekly fair value gap, and they take it back up into this range. What I have extended here is this weekly fair value gap that we've been watching, again, since we were up here, telling you we'd get down below it, use it as resistance, and sell off. How do I know that? Because if the algorithm is going to reach lower, it goes without being said that premium levels are going to act as resistance. So we hit that level perfectly on Friday's trading, so I want to see how we trade there moving forward. If it's going to be bearish, I'll have to see that confirmation here, and we'll have to stay below the weekly inversion fair value gap. Let me label that. If we get above the weekly inversion fair value gap, then I'm neutral, and then I'll have to wait for more information. All right, daily chart. This is where it gets interesting. So we saw several weaker runs lower. What I mean by that, well, we have a short-term low, weak run, short-term low, weak run. So whenever I start seeing that, that's a move that's, I guess, getting exhausted in a sense. So it's reasonable to see it retrace once that occurs. What I particularly like was how they left these equal lows here. Notice that? And then they stopped just short of it here. So when they take it higher, in my eyes, what that's selling the idea of is what? People that want to buy support, right? Look at all these equal lows. Like it hit it once, twice, 3 times, 4 times. So it's a quadruple bottom, right? So it's really strong support. And then when they drop it down here and turn it away from it once more, that further sells that idea, right? So in understanding that, what does that give us the insight to see? That there's going to be sell side liquidity or sell stops here. That if we want to go short up here, we want willing sellers to buy back from. So again, that's the lifeblood of the markets. So they took it higher into these relatively equal highs here and here. If it's going to be bearish, I'll need to see it turn from here because we've already taken out buy stops. So buy stops have been purged. If it's going to be bearish, again, I want to see it rotate lower from here. If we get above the weekly inversion fair value gap and we violate this up close candle, then I'm neutral to bullish on the daily chart. All right, so that's the business there. Let's go into the yield market. All right, so yield, same thing. Obviously, it's going to be the inverse of the treasury bonds that we just looked at. But nonetheless, I do like to look at the triad together. So we have, again, seen expansion higher. We looked at this range. Let me make it the mouse. We looked at this range high to low. And then ever since we were here in discount, we've been looking for a premium, right? And again, that's further facilitated higher prices on dollar, or confirmed that. Now that we've traded up into a premium, we've seen 1, 2, 3, 4 weeks of, again, consecutive upward expansion. It's reasonable once we traded into, again, that premium fair value gap that we've been watching this year, nailed that beautifully. Here, here, and then here, right? So all the respective yields reach their premium fair value gap. So again, it's reasonable to see that market retrace. Retrace where? A fair value or a short-term discount. What does that look like? The fair value gap here. So you see the inefficiency here on the weekly here, and then here on the 5-year. So what I'm going to want to observe and get insight from moving forward is how we trade inside these discount levels. Again, if it's going to be bullish, it's permissible to retrace. But once it retraces, it's going to have to show me that it's bullish and want to keep reaching higher. And again, that's how we have that X-ray vision into dollar, into currencies, what they should do, why they should do that. And then again, that gives us further insight into stock indices as well, because all of these markets are interconnected. It's like a well-oiled machine. And when you understand how each cog turns the other in this machine that we call the financial markets, it gives you clarity like no other. All right, let's drop down into the daily chart. So I'm watching this potential SMT, want to see if it holds. The 10-year yield traded lower and took out the sell side. 5-year yield traded lower and took out the sell side. We see that 30-year yield was unable to do so. So what I'm going to want to see is if this SMT holds, that would confirm this is a stop run. There's two ways I can confirm a stop run. If it trades down below it and immediately rejects, or if it trades down and then a correlated asset doesn't make that lower low, and it'll still reject and trade to the upside. So the first one's always going to hold true in a stop run. So the SMT allows me to confirm real accumulation and distribution. So if this SMT holds, I'll see this is dropping down into a short-term discount for accumulation, and then we should see the market rotate to the upside and trade higher. So that's the business on bonds. All right, let's go into E-mini S&P, and I'll take a few questions and then we'll get rolling. All right, so monthly chart, we had a bearish month trading down into this monthly fair value gap. So our targets were hit on the monthly chart. We opened this new monthly candle here and then we traded higher. What I was watching on the monthly specifically was this up close candle. And I want to see how we trade there. So this is going to be an influential level for me moving forward. If it's going to be bearish, I would want to see it sell off from here. It has no business getting above the opening price. And I would want to see it sell off hard from here. If we trade through that level and we keep expanding on the upside, then that would indicate likely longer term bullishness for stock indices. So that's what I'm weighing out on the monthly chart. However, if it's going to be bearish and we're going to see lower prices on indices, then we'll expect it to sell off from here. I'll want to see this create the high end wick of the monthly chart, and then I would want to see a subsequent expansion to the downside. And that's how I'm going to weigh out these two scenarios going into the coming week. All right, weekly chart, we traded higher into this range here. We have these last two up close candles. Those are going to be two key levels that I'm going to be watching, and that would again just be a refinement of the monthly chart, right? So it's nothing new that I'm doing in my analysis as I go through the time frames. It's simply a refinement, right? So what I'm looking at on the monthly, I'll just refine it to the weekly, then the daily, then the 4 hour, 1 hour, so on. So weekly chart, we're seeing the market trade higher. We have a range from low to high, and that'll be more clearly seen on the daily chart. All right, so from the high to the low, here, we've traded into equilibrium. So now that we've traded into equilibrium, I'm neutral. I'm still bearish based off what I'm looking at in dollar and what I'm looking at in the interest rates and everything there and what we have on a fundamental standpoint. However, the market is going to show me in a premium, right? So if it's going to be bearish, it's going to show a displacement from a premium. They're not going to keep it in premium valuation for long if it's going to break down. So now that we are in a premium, I'm going to again let the market show its hand. I'm favoring the market trading up into a premium from high to low. Above equilibrium, that would be a premium market, right? And we reached that this week. And if you look, one moment. There we go. All right, so I wanted to slide that through so you can see how equilibrium is an influential level on price action. You see where that 50% level is, 51.48.5. Look at the close of this candle up here. 51.48.5. Right. So again, the algorithm is absolutely referring to these key levels, and I wanted to see after we traded into this premium. I liked how we sold off on Tuesday, and then Wednesday we failed to continue breaking down. So Thursday into Friday, again, this is why it wasn't that clean of a week. If you see, all we did was really whipsaw up and down this week inside of a predetermined range, which is why I actually had my attention on crude oil. But we'll touch on that in a moment. with the analysis that I shared last week and just what I did with that analysis. All right, so daily chart, equilibrium, that's gonna be a key level. You see it's already been respected. It's been an influential level. But now that we've traded back into a premium, I'm gonna wanna see what we do Monday going into Tuesday. If it's gonna be bearish, we're gonna start seeing bearish market structure, right? We're gonna see a breakdown, a displacement, and then a rotation to the downside, attacking these equal lows here, the sell side here, and then if we really get animated, we have this low here. However, on the other side of that coin, if we displace through this and we don't show any willingness to break down, then we'll likely see new all-time highs on stock indices. So those are the two scenarios I'm weighing out. That will be confirmed with what we're looking at in dollar, though. So it's a matter of weighing out how these factors in our analysis dovetail together. All right, hourly chart for S&P. So again, last week, well, again, wasn't the cleanest technical week. A lot of just back and forth, staying in a predefined range. On the lower time frames, the scalpers, again, there's plenty of volatility. But on the daily chart, this wasn't that clear, so that's why I wasn't terribly interested in trading this market very much. I got what I was looking for on Friday, got paid, and early in the week. But for the most part, Tuesday and Wednesday, I was actually focused on crude more than anything. So looking at the buy side liquidity, yo, Remus David's mama, what? Nah, you're wrong. Yeah, is this guy just fucking clowning around or what? You guys can boot him out of here if you need to. We don't have time for any clown shit. All right, hourly chart, we have the buy side liquidity. So what I was watching on the hourly chart was how we traded, right? Because on the daily, we're just staying in a predefined range. So what we have to do is go into our lower time frames and refine that further. What was particularly interesting to me was how they left these relatively equal lows. So they took it into a premium, buy side liquidity, buy stops were taken out. So what I'm going to want to see what we do from here is how we trade in a premium. And again, if we break down. So I'll be interested to see, is this trading higher into the buy stops here to then break down and attack the sell side liquidity? That's what I'm going to be watching. That will be confirmed with a bullish dollar as well. So if we see strength in dollar, that's going to give further confirmation to the sell-off on the E-mini S&P chart. Looking at, all right, going right into NASDAQ, and then we'll look to wrap this up with crude oil. All right, so monthly chart, same thing as S&P, so I'm not going to have to go too much into this one because we're already on the same page. So monthly chart, again, we had a bearish week last week. We opened, we're trading higher. I'm going to want to monitor how we trade inside this monthly up-close candle. All right, weekly chart. So key level I gave you guys last week that I told you guys again would be an influential level in my analysis was this weekly inefficiency, right? So weekly inefficiency was a critical level, and then you'll notice the algorithm was using that the entire week, right? So again, that's not an accident. So we closed in that level. So it still didn't give me the insight that I'd want to see. What would have been ideal for this week, and in my eyes, would have been trade higher and either break down decisively or trade above it and close above it. Again, as traders, I don't care about the direction. Up or down, it doesn't matter. We're here to make money. So I just wanted more directional clarity. Because we closed inside of it, that still puts me in a neutral position because I can still justify lower prices based off what I'm looking for. But also it didn't confirm decisive weaknesses I would have wanted to see. So I'm still more in a neutral to bearish stance on NASDAQ. But again, we'll have that further confirmed with the DXY. So again, you still want to have that level on your chart. As you guys can see, these levels are absolutely influential. All right, so daily chart, looking at the NASDAQ, same thing as we saw on S&P, right? So we have a range from high to low, and we've traded into a premium when we hit this premium fair value gap. So everything I'm going to look for this week is going to hinge on this fair value gap. So if we are bearish, we're going to sell off from here and break down likely. If bullish, we'll get above it, use it as support, and then we'll likely make a run into these highs. That can sound like I'm calling two sides of the market, but what I'm giving you is what I expect, and I'm telling you I'm bearish, and I'm okay eating that if I'm wrong, because I don't make money being right, and I don't lose money being wrong. It's all about knowing what you're looking to do as a trader and how you harvest your income. So with that in mind, this level here, again, is going to tell me everything I need to know moving forward. If it's going to be bearish, I'd want to see a change in state of delivery and start seeing bearish market structure priced in. If it remains bullish, then we'll again just keep displacing through it, reaching higher, and then we'll look to the upside. And again, that's fine. It's whatever the market wants to give us. I'm here to profit off whatever pricing IPTA's spitting out. What direction? I don't care. All right, let's take a look at some questions, and we'll get going on this one. Oh, last thing, crude oil. Before I finish up on NQ, same thing here on the ES. So they had these equal highs here, here, and here. So when they took it higher Monday and then broke it down on Tuesday, I wasn't thinking that, okay, the ultimate high's been put in and it's going to sell off. Why? Because they left these equal highs here and here intact. So that's why I didn't like the sell off and why I wouldn't have looked for any like swing trades or shorts from here, because they left those equal highs and equal lows. So what's that? That's a 50-50 market condition that isn't one-sided. Can you still find trades and scalps in the intraday timeframes? Yeah, that's the nice thing about scalping, is all you need to know is where that 15-minute chart's going. If you know where the 15-minute or the hourly chart's going, then you have scalps. But in terms of low risk, high probability setups, which is what I train people that I'm coaching to look for and what I'm primarily looking for in my trades, that just didn't form here in this market condition and market structure. So looking at NASDAQ, I'll leave you off with this. We're in this daily fair value gap now. Again, how we trade there is going to be influential. So if we're going to sell off from here, I want to see us break down and make a nosedive for these equal lows here, here, and here. These are too clean, and they took it into the buy side first when we're bearish. So if we're going to break down, then I'll look for the market to start to accelerate and start showing bearish order flow. However, if the market structure and order flow remains bullish, then obviously I would have no reason looking for shorts, right? So it's a matter of weighing out market structure with your higher time frame analysis. All right, let's get into crude oil. All right, so daily chart for crude. If you guys will recall last week, I told you guys everything hinged on this. And the reason I'm going into crude right now is because out of all the analysis I shared with you guys last week, I actually did most of my trading in crude oil. So most of my business was handled in crude with what I shared with you guys last week. So what I was looking for, again, you guys can look at the recording. It's still there from last week, and what my expectations were. Everything hinged on this daily fair value gap, right? This wick here, I'm ignoring that. That's yeah, I'm just ignoring that. I'm not going to go into why, but yeah, I don't look at that in my analysis. So I'm looking at this inefficiency here, and how we trade there would be influential, as I told you guys last week. I liked these equal lows here and here. So those relatively equal lows, I like that as a short setup. But again, I have to have it confirmed to me. What would that confirmation be? We would sell off from the daily fair value gap. So once we saw Monday, we closed lower. Tuesday, I'm looking for shorts. Wednesday, I'm looking for shorts. And Wednesday, I caught a nice runner into the lows. So why did I opt to trade crude oil? Dylan, you specialize in stock index futures. Dylan, you're trading NASDAQ, S&P. You tell us to specialize. Well, I tell newer developing traders to specialize. Once you know what you're doing, this skill set applies to any market. It just has to be moving, right? So this here are my choice setups, not like what we saw in S&P and NASDAQ. And sure, there was all type of movement, right? Like it was moving a whole lot on the lower time frames. But what I look for as a trader is low risk, high probability setups. High probability is going to be linked to the higher time frame. So whenever I'm intraday trading a 1 minute, 5 minute, 15-minute chart, I'll take 20 handle runs, 40 handle runs. And that's what I've been having to trade a lot like in index futures, because it hasn't been clean. I mean, really all year it's just been this shitty consolidation sideways, with the exception of a small price run, and now we're back into sideways market structure. So outside of that, it hasn't been the cleanest. So I've been having to trade stock index futures like that. Get in, get out, 20, 40, 60 points. If you get it, be paid and be happy. And that's what I've seen to work more effectively for me this year. In other times, when the markets are cleaner, I'm willing to pyramid push equity much more aggressively. But again, you have to have the right market conditions to pyramid equity, to run it up a lot. So that has been missing in stock index futures for me. Yes, I'm still able to take trades and grow my equity, but I'm trying to put myself in overwhelmingly one-sided conditions that are explosive. So what does that look like? That's all going to be linked to your daily chart. So once I got the signatures here in the daily fair value gap, again, left you off all with this last week, We closed down on Monday, closing below it. So what's that telling me? This is going to be an inversion fair value gap. So when we open Tuesday, trade up into it, and then breaks down, what is that doing? That's acting as resistance. And then it's nosediving for what the equal lows. So the weekly chart is bearish, and we're looking for the weekly chart to trade lower, and it traded into its bullish order block. So we have the weekly chart behind us, daily chart as well, hourly, 15 and 5 minute. So there's a aspect to this type of setup that has higher time frame alignment top down. In the highest probability trades like I'm looking to take, yes, I'll take 20-40 handle runs. In an ideal world, I'm not going to be just messing around with that. I want to trade big runs that I can let run for 80, 100, 150 points. But again, the way you take down those big runs isn't going to be living on a 5-minute chart. You have to be able to reference your hourly and your daily chart or weekly, top down analysis to be able to find these big runs. Big runs don't happen based off your 1-minute chart. It's off the daily. So what you guys are getting insight into here is the market conditions I like to trade. What setups I'm looking to take, because I'm not trying to waste my time with everyday, small little fluctuations. I want bigger setups where there's meat on the bone that makes it worth my time to go in there, risk capital, and take down that setup. So what this looks like is something like this. Nice range expansion here on Wednesday. What do we have before Wednesday opens? Let me use the market replay. So what do we have before Wednesday opens? Well, we have equal lows here and equal lows here. We're seeing bearish order flow and market structure on the daily chart. So when we open this candle, what's the expectation? Obviously, it's bearish. I can't justify this market higher. That is the definition of the high probability market condition where you can't justify the opposing side, or it's next to near impossible. And I really like the way, again, my man ICT taught that, because it's a really good way to look and internalize the market. So if I'm not able to frame another direction, that's the direction I want to trade in. And especially if it's on a higher time frame daily chart, this gives me a lot of range to trade with. Hundreds of handles. So going into the lower time frame, this is more what I'm trying to trade, right? Directional price runs that are explosive, where all I have to do is get into a lower time frame entry based off time of day and the factors that I use to look at price action. And then I wait for those factors to come into alignment. I get into a low risk, high probability setup based off the lower time frame in line with my daily analysis. And then I'll let it run for hundreds of cents. And that's how you take down big moves. So you see now this is a market condition that I want to be trading because it's directional on the higher time frame. I like to trade directional markets that are moving on the higher time frame, because that's going to make for easy trading, low stress. You get in and it just runs to your levels. That's what I like to trade. I didn't see that in index futures this week. It was a mess. And if you look at the daily chart, it's atrocious. So why are we looking at crude oil? Why were you trading that asset class? Look at the contrast in the delivery. Which one, if you had the insight that I do, which one would you want to trade? Probably crude oil, right? So like I said early on, as you're developing, it's best to focus and specialize. But once you get the skill set, you can take it wherever you want and whatever makes the most sense for you. All right, so that's everything I had to share with you guys here. I'll take a few questions and then we'll look to get going. Let me open up the Discord. All right, nothing in the Discord. Let me go ahead and take a look at your guys' questions on here and we'll keep it moving. Mr. Nuller, please check out EU. Yes, sir. Hey, Joe. What's going on, brother? Hope you're doing good. Yeah, so for Euro, again, the general premise is going to be just flip the analysis that I have for dollar. But, I mean, there's a bit more detail than that, of course. Yeah, so on Euro, weekly charts, it's kind of sloppy. Let me go to... All right, so looking at the 2-day chart for Euro, we traded lower. We reached several key discount targets. We were looking for these equal lows here, here, and here, right? When we were bullish dollar, we were looking for lower Euro. So we retraced back up into this range. So from low to high, we traded into a short-term premium. We hit the fair value gap and bearish order block here, this last up close candle. So if we're going to be bearish for euro, we have to sell off from here, and I'd want to see lower time frame market structure to the downside. That's going to be confirmed by bullishness on dollar though. So confirm everything you're doing in currencies with the dollar, and that's going to give you precision that most can't even dream of. Pound, same thing. You want to look at the same factors on pound. Range high, range low, we trade up into a premium. How we trade there is going to be influential. I like this signature here. This is a weak candle. So as long as we continue to sell off, then that'll confirm lower foreign currency. But again, that's going to be met with a higher dollar. So that's the business for currencies. Med took shorts on crude, was lovely as soon as we got the daily candle close below. Yes, sir. Potential bounce soon to retest 80. Let me take a look at it. Yeah, got a fair value gap above. Yeah, so someone was asking, I think, for my long-term targets on crude oil. So yeah, let me just round out the analysis here. So I like the weakness signatures we're seeing. This market is looking exceedingly weak to me. So we have all this sell side liquidity down here. So we have this sell side here on crude. If we get animated through that sell side, we have this inefficiency here. How we trade at that inefficiency is going to be influential. If we start to accelerate through that, we could get all the way down to the sell side down here and complete a market maker sell model. What I want to see, if that's going to happen, if we're going to get down here, I'd want to see this fair value gap left open. And I'd want to see that be a breakaway gap. Because if that is left open as a breakaway gap, then that's going to confirm to me the market's exceedingly weak. And we don't even need to get above this mitigation block here. So we have a mitigation block overlapping a fair value gap. There's no need for it to get up into here. And if we leave that fair value gap open, then that'll confirm to me that we're likely going to keep diving to the downside. Med, do you like my executions I shared in the Telegram? Have not been able to see them, brother. Have not been much on the Telegram, but have a lot on my end. I like all executions, though. You know why? Because most can't do it. So, you know, if you're able to prove you can do this skill set on the right side of the chart, that's awesome, man. Because, you know, that means you're really walking the talk. And unfortunately, in this business, most can't walk the talk. Most just talk a whole lot of shit and nothing really behind it to back it up. So love to see it. Love all execution videos. Appreciate you letting me know. I'll go ahead and check it out, Ahmed. Keep killing it, brother. Futures handles failure swings. I believe that's relating to index futures. So yeah, absolutely. If it's going to be bearish, then I would want to see these act as failure swings. Absolutely. Cobra, do you trade gold? No, gold's not a market I prefer to trade personally. Index futures I specialize in. If I need or if I want to trade another asset class outside of that, I'll go into crude oil. And that's predominantly what I focus on now. Index futures are enough for a lifetime. So you don't need other markets. I elect to just because if I can see other setups, you know, just like you, right? If you see 20 bucks on the ground, you'll probably pick it up. So that's kind of how I look at other markets. I predominantly focus on index futures though, because again, they are absolutely enough for a lifetime. So I don't think you need to have, you know, 30 different assets to be a profitable trader. That's also not the case that I'm trying to make here as well. Hilal, what time frame for the change in state of delivery intraday? So for intraday, you could look for hourly or 15-minute chart. It all depends on what your analysis is and what time frame you're looking at. So it's all unique to what it is that you're doing. So if you have been trained how to do this, the person that showed you should also show you to get the information, but how do you make this information apply to your specific trading style, right? How do you make it work to what you're looking for, right? That's all going to be relevant to, are you a swing trader, position trader? You know, those are all things that I can't answer that you can answer. And then again, if you're equipped with the right information, you'll be able to make the right choices based off what you should be weighing out based off your trading style. So hopefully that helps you out, Hilal, because that is a personal question. Leo, what are going to be your high probability days for this week based off of calendar news? Excellent question, Leo. My colleague, Tommy, my team of analysts, we get together, we put together these blog posts, which are headed by, again, my man Tommy, who does an excellent job. He's been crushing it the entire year. So I would urge you to check those out. That's going to tell you what we're looking at for the economic calendar, how we're trading it. earnings reports that are notable, which, as you see this past week, you can't miss those earning reports. You have to know what you're looking at, right? And then we cover all those salient details that every trader should know. And then we also touch on COT reports for relevant markets as well. So you'll be able to get all that insights in our newsletter. So do not take the thunder away from that. James, where's your higher time frame target for crude oil? I saw your question in the corner of my eye, so I went ahead and answered that for you. So you know what we're looking at on the lower time frame for crude oil, looking for more lower prices. However, one thing to keep in mind, let me go ahead and stipulate this, just because right now in these conditions we're in with these wartime events, this can all turn upside down, right? Like we could open, in a couple hours and crude oil can gap up $5, $8. Like that's a real possibility. We're really in that type of climate right now, right? So take my analysis with a grain of salt, right? I adjust, I shift, I know what I'm looking at based off lower time frame, order flow, and market structure. So I'm able to pivot. So I also want to emphasize that to you guys as well, that just because I give you an analysis, that's my expectations based off what we're seeing right now. That changes based off every single candle that prints and gives you more data, because the more data you get, the more insight you're able to have in your trades. So I'm not locked into my bias, for example, like indices, right? Yes, I've been higher time frame bearish, but it's been doing what? It's been going up. So I have to do what? Get in line with what the market's showing me. So for crude oil, again, because it is going to be so dependent on what's going on in the Middle East and with the geopolitical events over there, keep in mind that all this can be turned upside down in a matter of seconds with just a few bombs going off. All this can be completely upside down. So keep in mind that even though that is my expectation, there is potential room for black swan events and stuff like that, especially in this market and the climate that we're in right now, because obviously that region of the world is highly influential over the commodity crude oil. Med Layla is going to be shared on the website. Appreciate you, Med. Thank you, sir. Mr. Nuller, yeah, it looks cleaner on your 2-day chart. Yeah, so 2-day chart, 3-day charts, there's a lot of non-traditional time frames you can use. One of the things that I do a lot of, obviously we have our traditional time frames, right? Your weekly, daily, hourly, 15, 5, 1 minute. But what I'll look for is I'll go into non-traditional time frames because the algorithm's still working off those intervals of time. And it doesn't know what a traditional time frame is. It's just working off these time intervals that it doesn't have a preference, right? It's not saying like, oh, well, I like that 15-minute order block better than the 25-minute order block. That's not a thing. Like it's referring to all the information, top down, bottom up. So when you understand that, you're able to go into odd time frames and get insight that many can't get because they're locked into time frames. And again, bringing up my man ICT, he called it like time frame prison. Most people are imprisoned mentally with just specific time frames. Whereas if you remove those limitations, you're able to see a lot more insight into what the algorithm's doing by not limiting yourself to specific time frames. So I'll go to all different types of time frames to get the clarity that I need for my analysis. How do you look at news drivers when trading? Very simple. That's an excellent question. So if I'm bearish, it's going to trade higher into buy stops and trip people long and stop anybody out that's short. Once that happens on the news release, preferably above the opening price, I'm going to sell short into that rally and expect it to drop. Vice versa, if we're bullish and we're expecting higher prices based off the higher time frame and the news comes out, I expect it to drop. When it drops, it's going to drop into one of two things: a discount in efficiency or sell stops low below the market. Once it does that, that has everything I need to go in and start hunting my buy setups. So only two things that I'm looking for in the news, and it's very simple. I have a very simple routine and a process that is consistent. Where's the higher time frame going? Wait for a run in the opposing direction at time of day, and then I look to hunt my entry. Joe, Adora team never fails to deliver. Appreciate you, brother. Thank you. Carla, hello, Adora Trading. Good day, Professor. Glad to have you, Carla. Thanks for joining us. Lael, take care. Denisha, enjoy the rest of your day with the family. Thanks again. Absolutely, Denisha. Glad to have you. Don't forget to give the stream a like before you go. Please do. And again, thank you very much for the reminder, Denisha. Mr. Stratkin, can you look at the YM? Yes, sir. Let's take a look at Dow, and then I'll go ahead and wrap up with here. All right, so Dow's a little interesting. Let's look at the weekly chart. Yeah, so here's what I'll look at on Dow. We'll want to watch this breaker. So the last down close here. So we traded into that. So what I'm going to want to observe is how we trade in this breaker in the same exact way that we did on the daily chart. The same exact process. I just want to show you guys how it's fractal, right? How we called it on the daily and how you can use the same thing for all your other time frames. If you guys will recall, when we were here, once we had the SMT at the highs, what did I tell you? Watch the fair value gap in the breaker to run into these lows. Money. Trades up, hits the breaker, fair value gap, nosedives into the sell side, right? And again, no hindsight. We don't delete streams here. So trades into that fair value gap breaker, nosedives. So the same thing is what I'm looking at on the weekly chart. It's just a fractal. So looking at the weekly chart here, we have this bearish breaker. So I'm going to want to see how we trade there. If we get through it, then that's going to tell me we're likely bullish and going higher. If we sell off from it like I would want to see, then that would confirm to me that we're going to be looking for lower prices on Dow. Looking at the daily chart, relatively equal highs here and here. You could see that better on the 4-hour chart, right? Look at all these smooth highs. And that's why, again, I wasn't convinced that we were dropping to drop entirely Tuesday going into Wednesday, because they left all those equal highs. Again, they're not going to leave all that buy-side liquidity, or they're not likely to leave all that buy-side liquidity and drop it lower. So now that we've traded up into the premium here, I'm going to want to see how we trade there moving forward for Dow. All right. Julian, thanks, Dylan. Absolutely, brother. Pleasure's all mine. Richard came in late. What's your bias on NQ? It's a little nuanced, so I would recommend you check out the recording. Again, we have these recordings up for your edification, so you'll be able to take a look at that, Richard. Aslam, thank you for your analysis, Dylan. Take care. Absolutely, Aslam. Take care as well. Daniel, do you trade before 9:30? Yeah, when certain conditions are there. I don't have any problem taking trades before 9:30. Ideally, I'm waiting for 9:30, 9:45 going into the 10 o'clock hour. But there's days where I'm absolutely willing to get into trades ahead of the 9:30 equities open. Absolutely. But the key is to understand market structure and how premium and discount relate to each other, right? And does it need to manipulate? Does it need to trade into a discount? If those things have already happened, then I'm willing to enter ahead of time. That might not make that much sense, but like I said, that would take a long time for me to explain. So have to cover that one on the next one, Daniel. But hopefully that gives you enough insight, in my opinion. Ahmed, good luck and good trading. Thank you again. Absolutely, Ahmed. You as well, brother. Good luck. Richard, got it. Thanks. Absolutely. All right, guys. I'm going to be signing off here. You guys have a phenomenal week this week. Good luck and good trading. And we will be sharing targets and updates throughout the week and picking back up on that with you guys. So with that, guys, again, that's going to be all from me. Stay safe and take care. Have a good evening, everyone.